Hello and welcome. This is the second video in my dividend reinvestment portfolio series. So if you haven't seen episode 1, I'd advise go back and watching it. It's a bit longer than sort of a usual video, but it does break down a lot of what I look for in a company and sort of explains why I invest and a bit of a breakdown of some of the companies that are already in the portfolio. Did you watch it? Yes? Are we ready? Okay, so now you've seen episode 1, you know what I look for in a company and you know what I need to invest. So now we've done that, let's get a little bit more involved in the portfolio. So now I won't be investing any more money today, but I'll be increasing my portfolio from 11 companies up to 19 companies using little more than just unrealised gains that I've made in a little over a month. Welcome to the Rebalancing. So I know the last video was a bit long, so I'm keeping this one much shorter. We'll jump straight into the portfolio and I'll show you in real time what shares are being sold in order to invest in these new companies by rebalancing. Just one quick thing before we jump into the portfolio, I've received my first dividend. That's not bad for being invested for just over a month. It was from AT&T and it was for a whopping £1.40. That doesn't sound like a lot, but I've made money from doing nothing. So let's get into it then. Let's open up the portfolio and I'll show you a quick look at the investment first, and then I'll talk about what's been invested, what's coming out, what's going in, and how the rebalancing is going to work. So just looking at the return on equity pie that I've made, we are currently up 11.28%, which is pretty good for the month. I think a lot of that has come from the gross shares that we were invested in. I'll be selling some of those now just to rebalance the portfolio. Now the good thing about the Trading 212 platform is it works out exactly what you want to do with your holdings and it works out all the percentages for you. If we look here, I've set new percentages on the portfolio to rebalance, and this is including all the new companies that currently we're not invested in yet, and it's going to rebalance the whole portfolio for us. All we have to do is click the rebalance button down here, and as you can see it's selling a good majority of AMD and Square, which I'd bought just for the growth with the intention of selling these at some point just to be able to reinvest it into the dividend gaining stocks. We're also selling a bit of Nvidia, AT&T's going, Raytheon, Aviva, Royal Dutch Shell. These are only being sold because there isn't quite enough gains on AMD and Square at the moment to cover everything else, but I'm happy to reduce those shareholdings down anyway to allow space for Coca Cola, DCC plc, 3M, GlaxoSmithKline, Persimmon, Pepsi Co, Seagate, Sage Group, and Medtronic's getting added up a slight bit, Rio Tinto's getting more put into it, Games Workshop, and Lloyds Bank is getting more added to it as well. Lloyds is only getting money added to it as this is cost averaging, as their share price has come down and the portfolio wants to hold a higher percentage than the value that it currently is. So normally this wouldn't have been increased, but just because the share price has come down, I need to buy more of them. So there we go. Confirm. Okay. Done. There we go. A lot of this can't go through yet because it needs to wait for the US markets to open. That'll be later on today. As soon as that goes through, I can give you an update of where we are in the portfolio and how everything's standing. So I'll speak to you in a few hours' time. And I'm back. The US markets have opened, the rebalance has been completed, and we now have our new dividend reinvestment portfolio set up. As we can see from here, the actual value of the portfolio has gone up since this morning, which is always a nice thing to see. However, the sort of return generated, because we've taken a lot of the gains out to reinvest, that's come down quite a long way since what it was this morning to 3.79%, but a gain's a gain and we're still happy with that. We'll just have a quick look at the holdings now and we can run through them one at a time just so we know what I'm invested in and the percentages I'm holding. Some of these are from last time before, so Rio Tinto, which has stayed at 10%, Medtronic, AT&T, Raytheon, Nvidia, Advanced Micro Devices, AMD, Square, Games Workshop. Now we've got a new one, 3M, Coca Cola, DCC, Royal Dutch Shell, Aviva and Lloyds were here from before, GlaxoSmithKline, Pepsi Co, Seagate, Persimmon and Sage Group. That rounds out the portfolio for now. We're going to leave it for this for now. It's not going to change for the rest of this month. We're looking at a few of these companies generating dividends or hopefully paying dividends come September, so we'll reassess then. And I've got about 15 or 16 other companies that I'm looking at. Not going to be able to bring all of them into here, but I'm looking to bring another 5, 6, 7 of them in sort of later on this year. So we'll speak then. Right, now we've had a look at the portfolio. There are just a couple of other things I'd want to mention about it. Knowing I talk about diversification quite a lot, I just wanted to say that this portfolio is still quite diversified. There is a lot of weighting in the technology sector at the moment because we do have quite a lot in AMD and Square for the time being. However, I am looking at reducing those over time as we can take more and more gains from them and invest them into dividend paying stocks. So before I did the rebalancing, there was 3 companies in the portfolio which equated to about 45% of the value, and that was AMD, Nvidia and Square. Now, because I've reduced the holdings in all 3 of those, it's actually a more evenly balanced portfolio, and with the 3 of them not paying a dividend, it's actually increased the overall average return that I would be getting from the portfolio. So currently, as it stands, with the current yields, even though some of them might not necessarily be paying a dividend at the moment, I'm looking at about a 3.45% return, which is an increase of what it was before. Hi everyone, it's Nick. Future Nick. Well, present Nick now, but future Nick when you're watching this. I've recorded the original video last Thursday. It's now Monday. I was hoping to get this video edited and out over the weekend, but I've been held up. But there are just a couple of pointers I'd want to add on to this video before I get back to past Nick to finish the video for you. So there's just a couple of things I want to mention. The first thing was I was a bit concerned about investing in Aviva, and as soon as I finished making this video, checked the news and Aviva have announced they are going to reinstate their dividend, which is good. It's not a massive dividend, but at least they're paying again now, which is good news for the portfolio, and hopefully that's going to add a bit more growth into Aviva itself, which is going to be even better for us. Just the other thing I'd want to add on to this as well, I know I wasn't investing any money into the portfolio today, or last week when I did it, but I have been charged a fee on investing in these UK stocks once I'd rebought them. This is just the stamp duty you pay, it's just a tax you have to pay when you buy UK shares, and it's always 0.5% of the transaction value. So as you can see, at the values I'm dealing with, it's pennies that we're paying. But just so you know, if you're investing, it says it's commission-free investing, therefore you're not getting charged a commission fee from the broker, but you still have to pay the stamp duty. That's just what you get for investing in UK shares. The US shares, there's no stamp duty on those. And that was really brief and sort of quite vague in terms of the tax that you pay on this, but I am putting together a tax video that I will be releasing shortly, just to go over the sort of summary of what tax is. So yeah, keep an eye on the channel and that'll be coming out soon. Now I've just added those couple of points in, I'm going to return you back to past Nick to finish off the video, so enjoy. However, with all that said, if you think there's anything I've missed out or there is a company that I should be including in the portfolio, just let me know, put it in the comments below, just so I'm aware of it. If it's something I've looked at before, I'll definitely check it out. Like I say, there are a list of companies that I'm looking at wanting to bring into the portfolio. I just want to make sure that they're going to fit in with how my portfolio is set up at the moment, and make sure that I'm not going to be overweighted in one sector or another, but there's going to be more to come. Just as a quick reminder, I'm not a financial advisor, I'm not an accountant. Everything that I've put in this video today is just purely on my own investments, what I want to do for myself. If you want to take on any of these investments, please do your own research. If you're unsure about anything, do not invest, or seek advice from a professional such as a financial advisor or an accountant. However, if you've enjoyed the video, I would really appreciate if you can just click that like button. And if you're not subscribed to the channel already, please just click the subscribe button, click the notification bell just to turn on your notifications so you'll be notified every time I make an upload. And like I said earlier, I'll be looking at reviewing this portfolio sort of into September, so you might not hear from me for a few weeks. But if anything does change, I will definitely let you know. But in the meantime, learn, invest, success.